This episode is brought to you in partnership with Forex.com, a leading provider of online trading services. Remember, trading Forex and CFDs carries risk and isn't suitable for everyone.
I was a barista at Starbucks making coffee. I was making about $150 to $200 a week. I had a girlfriend at the time. Long story short, she ended up breaking up with me to be with a rich guy, and that really screwed me up. And I always told myself that the best way to get back at her was to get rich. So that's what I did.
Hello and welcome back to another episode of Two Blokes Trading. Today's guest is Alex Temiz, a trader who went from working at Starbucks to stacking 8 figures in trading profits. He's built his edge shorting overhyped small caps at the exact moment retail FOMO turns to panic. Known for his first red day setups and stringent risk approach, Alex trades fast, he trades public, and he trades with serious intent.
When I first started, I started buying the breakout, and every single time I bought the breakout, the stock would go straight down. By my second year, I discovered something called short selling. I shorted 2,000 shares at $4 a share, made 50 cents a share, made $1,000. As soon as you start making money, it's crazy how many, not only ex-girlfriends, ex-friends, high school friends all start coming back. I think the reason why a lot of traders fail is they treat it like gambling. They don't even know why. They're just like, all right, fuck it, I'm gonna buy myself a BMW. I treat it like a professional business because I can make more money than a doctor, a lawyer, and an engineer combined. Doctor goes to school for 8 years. Lawyer goes to school for 6 years. Engineer goes to school for 5 years. Why can't you go to trading school for a year? It sounds kind of crazy, but like if you close my eyes, tie my hands behind my back, and tell me to trade with my feet, I could probably still make a couple $100 a day.
In this episode, we dive into how he spots opportunity, sizes risk, and stays sharp in a volatile market. This one's not to be missed. Alex, welcome to Two Blokes Trading. How are you?
Good to be here.
Good, yeah. Thanks for taking the time out of your day to come and join us.
Of course.
Kind of spoke to you before. I'm not as I'm not a big stock trader myself, especially not micro cap anyway. So excuse my ignorance, but I'll certainly maybe my ignorance will help some of our listeners along the way as well. You have a fascinating story. Like you literally came from working in Starbucks to becoming a millionaire trader. I mean, that's a fascinating story. Tell me how did that even happen?
Crazy story, man. So I'm coming up on my 12-year anniversary of trading. It's like 11 years and 8 months ago, I was a barista at Starbucks making coffee. I was making about $150 to $200 a week. You know, I had a girlfriend at the time, and what I would do is I'd take $50 and put it into my gas tank because gas was expensive. You know, take another $50 for movies, popcorn, this, that, and then whatever $50 to $100 was left, I put it in my bank account. Long story short, she ended up breaking up with me to be with a rich guy, and that really screwed me up. And I always told myself that the best way to get back at her was to get rich. So in America, I started researching the best ways to get rich, and it was real estate and the stock market. Real estate has such a high barrier to entry. You need hundreds of thousands of dollars to get started there. I didn't have that. But stock market, you could open up an account with like as low as $500, right? So that's what I did. And when I first started trading, I thought that the only way to get involved in the market was the Warren Buffett way. You buy a bunch of stocks, you wait 40 years, and maybe you'll have like $100,000. But at the time, I didn't want to wait 40 years, so I started kind of researching and learned about day trading, which is you could be in and out of stocks within the same day, within the same hour, sometimes within the same minute. And because of that, the moves are very exaggerated. Rather than trying to focus on making 10% in a year, with the right stocks, you can make 10% in an hour, right? So that's kind of what attracted me to the day trading world. I started the same way as everyone else, going on YouTube. Back then, there was not as much focus in the trading world. Unfortunately, I feel like the trading world has gotten a bad name because of all the people out here in Miami that are driving Bugattis and Paganis, all this shit, right? So it kind of gives legitimate trading a little bit of a bad name. But back then, that stuff didn't exist. Those kids were not even born yet, right? Yeah. So it might have been a lot less information, but what I remember very clearly is there was one strategy that everyone was talking about: is buy the breakout, right? Buy the breakout. If a stock breaks out, buy it. So when I first started, I started buying the breakout. And every single time I bought the breakout, the stock would go straight down. Every single time. I would hit buy and it would crater, right? Companies under investigation, CEO is doing some wacky shit, company would just go straight down every time I would buy. So my first year, I lost money. By my second year, I discovered something called short selling, which is making money when stocks go down. I was like, dude, this is perfect. Instead of hitting, the buy button, I'm going to hit the short button and I'm going to be rich. So I still remember my first short trade ever. It was on a stock called VGGL. They've since been delisted. I shorted 2,000 shares at $4 a share, made 50 cents a share, made $1,000. That was the most money I ever made at any point ever. And since then, I was hooked. So in my second year, I started to break even. And by my third year, I started to consistently make hundreds of dollars a day. And now, fast forward 12 years later, I've made over $16 million.
That's it. Do you know what? Did you give any of that to your ex-girlfriend?
Yeah, it's crazy, man. As soon as you start making money, it's crazy how many, not only ex-girlfriends, ex-friends, high school friends, all coming back, right?
Yeah, for sure. That's an incredible journey. I mean, like, I'm sure it's even listeners like listening to this. I mean, they've all got aspirations and things that they want to do. Unfortunately, as we know, 90% of traders will take this journey and will fail. I mean, like, what do you think separates you from everybody else that took this journey and actually succeeded?
Yeah, I think it's a great question. So to be good at anything, you have to actually like it, right? So I feel like a lot of, these motivational things that you see on social media is if you do what you love, you'll never work a day in your life. What the hell does that even mean? So for example, my dad loves fishing. This guy will go fishing every single day of the week. Even if it's freezing outside, he'll go fishing. If he could start a career somehow, some way in the fishing world, he would do what he loves and makes money. At the time, I was very in love with, the Wall Street movies, the fancy suits, the fancy cars, the fancy lifestyle. So to me, it was always like an obsession of that world. And when I was just getting started, instead of watching Netflix or anything like that, I was watching trading videos every single day. Buying the breakout didn't work. Let me try something else. Let me learn technical analysis. Let me learn about, company filing. So I was obsessed with the fact of learning of trading. Even now, 12 years later, I am still watching trading videos. I am still learning. So I have a little bit of an addictive personality, and I use that addiction to focus on my knowledge. So I think the reason why a lot of traders fail is they treat it like gambling. They don't even know why these stocks are moving. They don't look at the news. They don't look at the technicals. They don't look at anything. They're just like, all right, fuck it. I think that this stock is going to go up, and when it goes up, I'm going to buy myself a BMW, right? But that's not how it works. Well, for me, I think the biggest thing that separates the successful and unsuccessful is how seriously are you treating it? Trading is a business. If you want to treat it as a hobby, you will get hobby results. If you want to treat it like gambling, you will get gambling results. But even to this day, I treat it like a professional business because I can make more money than a doctor, a lawyer, and an engineer combined, right? But not if I'm just showing up at 9:29, a minute before the market opens. I'm pressing a couple buttons, and I don't know what the hell is even going on.
Sure. Absolutely. I think there's two things. I think, like you say, I think number one, the information out there for people is it's so obscure. I mean, where do you go? Number two is, like, people want instant results, like immediately. They don't realize that any profession or any skill that you're going to do is going to take time. I mean, we're talking about years, we're not talking about days or weeks or months. And look, you can definitely shortcut your journey with the right mentorship, with the right kind of access to the right information, for sure. But at the same time, it's still a grind. You still got to get through that grind before you're going to get results, right?
Yeah, I think the way, again, like I said, you can make more than doctor, lawyer, engineer. Doctor goes to school for 8 years. Lawyer goes to school for 6 years. Engineer goes to school for 5 years. Why can't you go to trading school for a year, right? Are you willing to sacrifice 1 year, even 2 years? It took me 3 years, right? Yeah. To be able to live the next 9 years, the next 15 years, the next 20 years, however way I want. If you tell someone, look, you're going to make no money for 2 years, but after 2 years, you're going to start making $100,000 a year, people are going to take that deal, right? But if you don't see those results and you're not willing to put in the work, then it's just a pipe dream.
Sure. I mean, it's all about consistency. I mean, and I think that's the ultimate goal for any trader, is just finding that consistency. You obviously trade as well publicly and share your trades live. Tell me, does that change your mental behavior from when you're trading privately? When you've got the eyes of the world almost on top of you, that pressure, that kind of feeling of somebody's on your shoulders almost. How do you find the difference between, and do you trade differently when you're doing it live?
Yeah, so I started trading live for, I think it's about 2.5, 3 years now. So I have a Zoom link that gets sent out with no delay, and traders just watch me trade live, every single day. And when I first started, I was always a little bit maybe nervous because, I want to just do the right thing. And what ended up happening is I was being actually so incredibly disciplined with my trading because I didn't want to screw up. And what that led to is actually me trading a little bit better. So to be honest, whether I'm trading privately or whether I'm trading publicly, after doing it for a couple of years, I don't even think about it. I just try to trade as if, no one's really watching. And, I screw up from time to time. I don't make money every single day, but, I actually prefer on those losing days because it shows everyone that, I'm a human. I don't need to win every single day to make millions of dollars. I don't need to be a perfect trader to make millions of dollars. I mean, a little bit later in the show, we're going to review a trade where I lost 3 times on the stock, took a realized loss, but because I was adding heavier when the stock went in my favor, I made back the loss plus more. Turns out you don't have to be a perfect trader to make money. You just have to manage your risk and be more aggressive when the stock is going in your favor.
Yeah, absolutely. And just talking about that, maybe you could just pop that up on the screen when I have a look.
Sure. So this is actually, I'll pop it up right now. So this is a pretty unassuming chart, I would say, to most people. So if you look at the daily chart on this stock, CMBM, you can see it's just been trending down and trending down and trending down from 65 all the way down to like 50 cents, right? So the reason why this stock is very important because it requires some context. So this stock happened on October 29, 2025. The reason why this stock is important because just a week before, Beyond Meat went crazy. So I don't know if you saw all the news or all the headlines about Beyond Meat, but Beyond Meat was essentially a bankrupt company. They announced some news with Walmart. They announced some news with restructuring their debt. And the stock went from 50 cents all the way to $7.50 and came all the way back down to $1. So essentially more of like a pump and dump type move. So for me, this got a lot of traders excited. The reason why is because when a stock goes from, let's say, 50 cents to $7 or $8, traders are looking for the next stock that's going to do that. They're saying, all right, the next stock that's 50 cents that goes up, I want to buy because it's going to make a move like Beyond Meat. So CMBM actually came at the perfect time. This stock was 50 cents and it took literally about 1 to 2 days to go up 1,000%. Versus Beyond Meat, the move that started everything, took at least 3 days to go up 1,000% and more. So we have a stock that pushed up on Beyond Meat and came all the way back down. CMBM was that next sympathy play. So traders were not buying this stock in any type of reason other than the fact that it was another sexy 50-cent stock that's probably going to go up. Once again, traders don't know the news. Traders don't know why it's even moving, but they see the price range and they're like, all right, I'm going to buy. So CMBM, we scroll back a little bit. So CMBM started the move right around 60 cents a share. Around pre-market, it pushed all the way up, kind of consolidated, and then ended up, kind of breaking out higher over $3. Once it broke out over $3, it just continued to squeeze all the way up to $7 within the after hours close. So by 5:30 p.m., the stock was at $7, and, at 5 a.m., it was at 70 cents. So it went up 1,000% in literally one huge session. Now, because Beyond Meat happened, this told me that chances are this stock is not going to make a Beyond Meat type of move, right? It doesn't have the volume. It doesn't have the liquidity. It doesn't have the hype. It's just another 50-cent stock running. So for me, I primarily focus on the short side of trade. I focus on finding the worst companies in the world and bet that they go lower. So this example of CMBM is actually very, very powerful because I'll show you right here. So the way that I structure my trades is technical analysis is very, very important. First things first is let's draw some basic levels of support. So I see support around 5 and I see support around, 530 around here. You can see that every time it bounced to 530, every time it hit 530, it bounced higher. Every time it hit 530, it bounced higher. Every time it hit 530, it bounced higher. So nearly 3 times it hit the 530 support and bounced higher. Now, what am I also seeing? I'm also seeing a potential double top. I'm also seeing a potential double top around $7, called 720. So I see a top here, I see a top here, I see a top here, and I see a top here. So this is the middle of the range right here, right? It's 720 is the resistance, 530 is the support. So ideally, what I want to do on a trade like this is I want to start shorting into the bounces, right? I want to short into the bounces with a risk level around 720. And as I see the stock going in my favor, as I see the stock breaking down the key areas, which would be 530, and the final key area, which I would say is $5, this stock should probably unwind, right? Remember, it's up from 60, 70 cents a share, up 1,000% on nothing more than pretty much a hike. So let me show you actually exactly how I traded it. So this stock, I actually ended up getting a little bit chopped up on because I was a little bit overeater. So let me go through it. So this is my exact trade. So let's go through the process. So the stock is up 1,000% in one day. And day 2 on the stock didn't show much momentum. So I'm looking for a potential profit-taking day. So I started scaling short on the bounces and covering into support to lock in profits. Remember, that first support area was 530. So because that support level was 530, that was very, very important to me. I always want to take a little bit of my position off at support to build profit cushion. A lot of traders, they have arbitrary price targets in their head. They say this stock is going to break down to $1.50. I'm not going to get out till it's $1.50. Market doesn't care about your arbitrary price target. What matters is the technicals. So I always want to reduce some into the key technical support areas to give myself a bit of a profit cushion. That way, it's almost like an insurance policy. If things go wrong, I could risk some of my realized profits instead of risking something else. So covered some on the dip, and as we started to bounce and fail, I started to add more to the winner. Fortunately, the stock ended up reclaiming. I stopped out for a loss and reattacked after the death cam. So probably right around here is where I gave back my initial profits on the day. But wait a second, I saw this stock, let me zoom in a little bit. I saw this stock have a big red fail candle. So to me, this is something called a death candle. A death candle usually triggers a profit-taking signal on a stock. So I stopped out for a small loss, no problem. And then as the stock failed again, I got back in. At this point, it reclaimed once again, and I got chopped out. So at this point, I'm shorting, stopping out for a loss, stopping out for a loss. So I'm down about 5K here. And then I short again, and I stop out for another loss. I stopped out, maybe lost another $10,000 here. So all in all, I lost around $15,000 or $16,000. Once again, my entire plan is, as long as I'm managing my risk, I want to add heavier when the stock is going in my favor. I feel like a lot of traders are very, they're price average sensitive. So they're like, oh, I'm going to screw up my average price. I'm going to screw up my average price. I don't care about your average price. All I care about is the direction that the stock is going in relation to my average. So I'd rather have a worse average price per share but larger size if the stock is going in my favor versus randomly just adding to a loser to try to fix my average. So I got chopped up and stopped out for a loss again, but planned on adding back after a fail. This would be my final attempt. So once again, I saw the same signal that I saw earlier, this same death candle. I saw it again here. So this is my final attempt. Take my starter and add to the winner. Now we're seeing support breaking at 590. Add to the winner. Remember, 530 was that ultimate support level. Aggressively, as 530 is breaking down, I'm adding to the winner. Again, taking some money into the dips around $5, re-shorting the bounce, hovering at 460, 470, re-shorting the bounce and getting out. Fortunately for me, this stock ended up going significantly lower on the day because I got out a little bit too early. So this stock ended up closing the day around $3 a share. So you could see that the stock primarily broke that 530 level of support. It acted as resistance here, which confirmed the move, broke the $5 support, and then it just waterfalled all the way back down. And since then, it hasn't really been too active. So this was an example of a trade where, I lost, I ended up losing $16,000 by here, but because I added aggressively when the stock went in my favor, because the stock confirmed my thesis, I was able to not only make back the loss plus more, and I ended the day at $87,697 for the day. So I not only made back that $16,000 loss, but I made back, 80 grand on top of it. So that's an example of showing how you could be wrong, but I was only down 16 grand on the trade. But when I was right, I ended up making 100 grand, right? Because I added more aggressively as the stock was in my favor versus just randomly adding to a loser, which I see way too many traders doing.
And tell me, so in terms of your scaling into a position, right? I mean, how do you size your first entry as opposed to your add-on positioning?
Right. So I have a rule, right? So my rule is, because I'm primarily a short bias trader, I use the VWAP very, very religiously. So the VWAP is the volume weighted average price. So it's essentially the average price that, a stock is, that traders have that stock for the day. So for me, as a short bias trader, if a stock is trading above VWAP, meaning that is going higher, I only want to use 30% of my max size on the stock. Why? It's because if I'm wrong, I'll only be wrong 30% of my size. And if it's under the VWAP area, then I could get more aggressive. Then I could double up, triple up, right? Because then I could go to 100% size and that'll be triple my size, right? So for me, I'm always looking for a key confirmation signal on a chart to reinforce my thesis. For example, if you are a long bias trader, a key confirmation may be a break of high of the day, a continuation higher. That's a signal. If you are a long bias trader and the stock breaks under the low of the day, it's probably not going to work out. So that's a signal that you should probably get out. So I keep it very, very simple. So for me, as a short bias trader, my signal is like a death candle, a big red candle on elevated volume, break of low of the day, a break of the key support areas. And once I see those signals, each signal is a confirmation to get more aggressive, get more aggressive, get more aggressive. If I'm using 30% of my size when the stock is above VWAP, maybe when it breaks low of the day, I'm going to go to 50% of size. Maybe when it breaks support, I'm going to go to 75% of my size. Maybe when it breaks the keyhole number, I'll be at 100% of my size. You know what I'm saying? So it's always dependent based on the price action of the stock. It's not just, it's 11 o'clock today, I just have my coffee, let me draw some size. It makes no sense. It makes no sense.
Sure.
You need a signal. And for me, there's always a signal in trade, whether it be long bias or short bias. There's always a signal that you could see on a chart or or a news catalyst or something that ends up, creating a price action confirmation for you.
And has that evolved for you over the years of trading? So you're 15 years deep into this. Has that evolved? Has that approach evolved? And do you think scaling in approach has completely changed how your success rates?
Yeah, I mean, I've never been the type of trader that could be one shot, one kill. I'm just not that good, right? Maybe there's other traders that are bad. I just can't do that. I always find, man, if I scale in, it kind of calms me down a little bit because I don't feel the pressure of needing to get it right on one entry, right? So if I take a small starter and either cut that starter if I'm wrong, okay, at least I tried. Or if I take that small starter and I'm focused in on the stock and it does what I'm looking for, and I can get more aggressive. That's how I feel more comfortable because I've never been able to just hit the exact top and hit the exact bottom on these stocks. It's not me.
A big thanks to our sponsor, Forex.com, for supporting this show and keeping it free for all of you. One feature I think a lot of traders will love is that you can actually link your Forex.com account directly into TradingView. So instead of bouncing between platforms, you can analyze a chart, spot the setup, and place the trade right there. Another tool I really rate is their performance analytics. It doesn't just tell you your wins and your losses. It shows you patterns, like what time of day you tend to trade best, or which strategies are really working for you. That kind of feedback can make a huge difference over the long run. We're able to keep putting on these episodes every week thanks to partners like Forex.com. And if you're looking for a broker with strong tools and integrations, they're definitely worth a look. Just a reminder, trading Forex and CFDs carries a risk and is not suitable for everyone, so always trade responsibly. If you want to check them out, there's a link in the description. How do you combine the technical side of it as to, what's going on with that? I mean, again, these micro cap stocks I'm not that familiar with. When you're talking about technical analysis and everything else, I'm absolutely aware and for sure. But how how I approach the markets, let's say if I'm trading gold, for instance, right? So I'm going into the market with a bias. So I'm kind of okay, I think gold's going to go up. And then I'm looking for that entry through my technicals. And then I'm entering with conviction. But how does that change when you're trading a micro stock with, and how do you actually set up for that?
Yeah. So most of the stocks in the small cap world are all garbage stocks, man. Seriously. These are all early stage development, pump and dump type of companies, right? So it's not, a lot of people say, it's un-American to short these companies, but what's un-American? When these companies are diluting shareholders, taking the money and using the money to fly on private planes to Monaco. This is what these companies do. They don't care about their investors. They don't care about their shareholders. All they care about is how to, raise money to, live their lifestyle, right? You think about a company I don't know. I mean, I always use the example of GameStop and AMC is GameStop and AMC, they're companies, but like reality is that gaming went online. There's really no need for a GameStop. And although it had a major short squeeze, since then, it's been pretty much dead. AMC, I love movie theaters. Movie theaters are my favorite thing in the world, but the company's not making money. So am I going to sit here and invest in a company that's losing money, or am I going to capitalize on the fact that they keep diluting shareholders to raise money? So my thought process is a lot of these companies are just mostly BS. And if Wall Street and the hedge funds and the institutions are profiting on it, why can't a little guy like me profit on it too?
Sure. And it's like when you open up your screens and you're looking for these different opportunities, I suppose number one, is it only US kind of companies? Are you looking at Chinese stocks or other stocks as well? Or, how do you get that watch list?
Yeah, so maybe I'll walk you through my entire daily process. So usually what I do is I wake up around like 6 a.m. I used to wake up at 4 a.m., but I got a little bit lazy these days. So, I wake up at 6 a.m. First thing I do is I look at the top percentage gainers on the day. So as a short bias trader, I want the stocks that are gapping up the most so that they have the most room to come back down. If a stock is gapping up 10, 20%, what is it going to go down? It's not going to go down anything. But if you see a stock gapping up 300, 400, 500%, which happens all the time, you have plenty of room for it to go down. So I'm looking at the top percentage gainers. Then what I have to do is I have to look at the news. Why is this stock even moving? If a company partnered with NVIDIA, I'm not going to touch it, right? If a company partnered with, McDonald's, I'm not going to touch it. But if a company signed a letter of intent with, XYZ crypto company or whatever it is, just starts BS, right?
Mm-hmm.
Or they found a way to cure cancer in cockroaches, right? What the fuck are you even talking? You know what I'm saying? But like these stocks go up. So I have to know what the reason for the stock is moving. If they have a multi-billion-dollar or a multi-trillion-dollar company in the press release, I don't want to touch it. That's very pumpable news. That's news that very easily could go higher. They could spin that whatever way they want. So I don't really touch that. Sometimes stocks are gapping up 100, 200% on no news. It happens too. So that's something that's just interesting to me. Then what I do is I look at the daily charts. What I like to see on the daily chart is an example of something that I call pop and drops. So let me show you. So this is an example of a pop and drop. So if you look at this daily chart on SPRC, you could see that every time it gets volume, it fails the same day. Every time it gets volume, it fails the same day. Every time it gets volume, it fails the same day. Every time it gets volume, it fails the same day. I don't know about you, but I see a pattern. So what I'm looking for is I'm looking for the daily chart to show me that the pattern is that every time the stock pops up, it comes back down. Now, Alex, how the hell and why the hell does it pop up and pop down? Because the company is putting out some BS press release to sell their shares. They want to sell their shares. It's supply and demand. If they introduce more supply, aka shares, into the market, price is going to go down. So they use the press release to generate hype, to get people excited, and they just, drop the hammer on them. So if I find a stock that fits that criteria, then I'm going to be interested. Then what I'll do is I'll look at the pre-market action, draw my areas of support and resistance. And ideally, what I would look for is at the market open for these stocks to bounce to those key levels, fail, and then piggyback that trend. And that's what I'm doing pretty much every single day. We've been blessed to be in a aggressive bull market. A lot of companies are turning into AI companies. A lot of companies are turning into crypto treasury companies. Most of these companies 3 months ago were marijuana companies. It's not, so for me, it's almost a lot of people know about the meme coins in crypto. Imagine like these meme stocks. So a lot of these meme coins, they go to zero, right? It's like hot potato, or eventually someone's going to lose. So for me, instead of focusing on the crypto world, which is all like penny coins, I focus on stocks,
Nice. And it is only American stocks. You don't go off to other, like you say, Chinese stocks or...
I focus primarily on American. I have found that Chinese stocks are very heavily manipulated. The Chinese stocks always do abnormal stuff. They don't follow normal price action. There's a lot of aggressive algorithmic trading on those. So for me personally, every time I try to trade Chinese stock, I lose money. So I'd rather just stick to Chinese food, man.
Fair. And any setups right now that you're looking at or interested in?
So a big setup that I kind of screwed up today, man. So I don't know if you saw this company here, SanDisk, SNDK. So SNDK, those memory cards that you put into your camera, like the SanDisk memory cards. So this company went from $25 at the beginning of the year to $275 a share. Now, this is being hyped up as a AI storage company, right? And although it may be a pretty solid AI storage company, if a stock goes up 1,000% in 2 months, even if it's a large cap, mega cap stock, chances are it's probably going to come back down. So this had, multiple aggressive green days, going from $200 to nearly $300 a share in just 4 days. So I was actually primarily watching to short this stock today, and you could even see I drew my trend line from earlier. You could even see from here as well. So I was using previous support to act as resistance. You could see support, start acting as resistance. So I hesitated and I didn't pull the trigger here when I should have. Obviously, I missed out on, $25 a share. But that's just something that I was watching that I kind of screwed up. So, I just felt a little bit uncomfortable trading it. I knew we had this podcast today, and I didn't want to get myself into any trouble before this and kind of not give you my heart focus. So I better not to trade it.
Just to go back to that screen for a second. So I'm interested from I suppose how I would look at a chart myself personally. So
I pull it up again.
And just in terms of this, like, was there any news around this or anything else? What other confirmations were you getting that this was a potential sell other than it? So obviously we've got your support levels here written out. I mean, again, looking at previous price action, we saw that big drop off to support, but then we kind of seen some, range trading after that. And then we've seen a break of that support. So at that point, you're just, you're almost seeing like a quadruple bottom there. Now you're like, okay, if we do get that break of that bottom, that's your entry point straight away, right?
Correct. So I could have, said, you know what, right when the market opens, throw in a short, but that's not really what I'm interested in. I'd rather wait to see it kind of consolidate and either push and fail or break down. And in this case, you can see it pushed and failed here, kind of pushed here, and then just failed again. So how I would have traded it is I would have probably taken a starter position here, maybe added to the winner here on the VWAP break. And then once again, if it broke low of the day, get into my full size position. So pretty similar thing, confirmations, break of key support, break of VWAP, and break of low of the day. That's enough signals for me to, get aggressive on the name. And unfortunately, I just didn't feel it. Just because, you're a professional trader doesn't mean that you have to take every single trade. Sometimes if I just don't feel comfortable, sometimes if I feel like the stock is trapping, or sometimes I just don't want to deal with the stress, I don't have to take the trade. The way that I relate trading is like in blackjack, when you're playing cards at the casino, you have to bet first and the dealer gives you your cards after you bet. Trading is the only game where you could see your cards first and then bet after. So for me, I'm waiting to see the perfect deck of cards right in front of me, and then I'm going to bet, right? And this might have been that opportunity, but I just didn't feel it today. I just didn't feel it. That's totally fine. I traded something else.
But that's the thing, right? And look, there's always going to be another opportunity. And the worst thing that people can do is feel that loss and want to chase that loss. And then as soon as they're entering, then they're entering at the wrong time. It's so important to let that trade to come to you to hit your rules, and then you can execute on that basis. And I suppose just for our listeners and maybe some tips for the guys listening in. I mean, if someone is part-time trading at the moment, right? Is there any specific habits that they should kind of focus on to improve their own consistency?
Yeah, I mean, look, I think that mastering technical analysis takes time, but it's really not that hard once you understand basic support and resistance. You don't need to worry about these fancy indicators. You don't need to worry about that. At least that's what I do. I don't worry about those. It's stuff is learn basic support and resistance. That's very, very key. That works in every single market. It works in Forex, futures, crypto options, anything. So that's number one. That's your foundation. Number two is you have to make sure that, I think anyone could learn how to make money in the markets. I think making money isn't hard. I think it's the losing money that actually gets a lot of people. So for me, had I just stuck to my risk when I first started, had I just stuck to my stops when I first started, I would have had $1 million extra on my bank account, right? But I'm stubborn. I'm an idiot. I'm the king of idiots still. I still, get stubborn. But my advice will be, if you want to, focus on anything, focus on getting out of your losing stocks faster. I've always been the type of person that said, I could just manually stop out, right? I'll just stop out. Don't worry. But every time it gets to my stop out, I'm like, well, what deer in headlights? I'm like, all right, let me see if it's going to come back to my average. And then it's a $5,000 loss. And I'm like, all right, if it just goes down to a $2,000 loss, I'll eat it. And then it goes to a $10,000 loss. And then I'm like, please, if it goes to 5,000, I'll eat it. And it goes to 20,000. I'm just like, dude, if I just stopped out, I would get $1,000.
Yeah.
So yeah, my advice would be don't try to manually stop out. Set a stop order and be religious to it. And anyone that's watching this knows that if you just stopped out where your plan told you to stop out, you would have so much more money, you know?
For sure. No, I couldn't agree any more. I think it's one of the reasons why so many traders lose. And again, there's two sides of it. You got risk management, and you got that discipline and psychology, right? And they feed each other. And what people don't realize is they're not two separate things. As much as they are two separate things, they're one of each other. I mean, because if you follow your rules and you got good risk management, psychology doesn't come into play. But as soon as you start breaking those rules and you start letting trades go against you, then your psychology comes into play, and all of a sudden your psychology is fighting your risk management. And it's
And we're all human. We all screw up from time to time. I mean, there's obviously been times that I go on trading tilt as well, but I got to make sure that so long as my stops are in place, I mean, that tilt is controlled, right? It doesn't matter what type of level trader you are, unless you're a freaking robot, which a lot of people aren't, emotions come in the way. And you need to make sure that you set systems in place, whether it be risk parameters or, any type of thing that you could do. I once knew a guy, crazy story. So this guy was a doctor, and he was a Harvard educated doctor. He was making more money trading than he was being a doctor. But here was his problem. His problem was around 11 o'clock, in the 11 o'clock market time, he would just start gambling his profits away. So eventually what he did is he had his secretary at the doctor's office walk into the office at 11 a.m. and pull the plug out of the computer. Without pulling the plug out of the computer, this guy would not stop trading. So that's a form of risk management that he created for his own trading, although it may be a little bit obscure and intense. That's what he had to do. So sometimes you have to do these things to protect yourself from yourself.
And I suppose if you had to strip down your own rules, and I know you keep it really simple, but if you had to say, okay, for our listeners, there's 3 simple rules, stick to it. I know we spoke about kind of support resistance, keeping that simple. But is there any one thing that you think rises you above anyone else?
Yeah. Add to your winners, not your losers. I see so many traders scaling into their losers, right? They'll use 5,000 shares on a losing stock, but 500 shares when they're winning on the stock. And then their losses are always bigger than their wins. So I'm always okay taking a small piece, a small start, or a small, feeler trade. But if I'm wrong, I'm not just going to add into oblivion to fix my average. I'm just get out and I'm going to focus on waiting for my confirmation signal to get it more aggressive. If you only add to your winning trades instead of only adding to your losing trades, you will become so wealthy faster than you ever imagined. Was very difficult. The reason why it's difficult is because humans want to fix their average. They want to fix the trade. They want to get out of a hole. So the biggest thing that kind of helped me is, I'm human, right? Maybe 9 times out of 10, I don't add to my loser. 1 time out of 10, I add to my loser, but then I make sure my stops are in place, right? So no one is 100% robotic. I'm still working on it, right? I'm still working on it. But my biggest advice would be just make sure when the stock is going in your favor, don't just take the money very quickly and walk away. If it's the right stock, get more aggressive because you're right on the stock. It's like when you're playing blackjack and you have the right cards, are you just going to sit there or are you going to double down, right? You're showing an 11 and the dealer is showing a 2. You're going to double down on that hand because you have a higher probability of winning. Imagine if every time in blackjack you got an 11, you just at the same amount and took the money. You can't win. There's certain times where you have to bet more aggressively, and those certain times that you bet more aggressively are on the winners exclusively.
But then there's obviously a skill involved when you get out of that trade and take your profit, right? Is it based upon technical or is it based upon more your intuition within the markets?
I base it on technicals, man. My intuition plays games on me. My intuition is greed. My intuition is ego. My intuition is always trying to, it's like the devil on my shoulder, right? Hold for longer. But my whole thought process is use basic support and resistance. I have no problem with the stock going lower or higher without me, so long as I'm making money. So what? I'm not making an extra couple $100. Oh, so what? I'm not making a couple $1,000. I'm still making a significant amount of money. Yeah, I could have held for longer. Yeah, it might have worked out, but what about all the times it didn't work out? If I just take my money at the key areas, I'm trading very professionally. I'm not trading based on emotion and ego. So there's plenty of times that the stock goes further in my direction after I exit the position. But after, doing it for 12 years, I'm just like, all right, whatever, man. I'm still making money. I'm still
But it's your conviction. And I think that's one thing that I'll find between successful traders and losing traders is the conviction. It's their effort, motivation, but conviction, discipline, all these things. And tell me, would you ever stop trading? Is this something that you'll ever, would you ever jump off the seat and just let it go?
I thought about this a lot. A lot. And I think the answer is, I don't think I'll stop trading. I just think I'll scale down. I should have
De-risk.
Yeah, if we're sticking for $100,000 $1 million days, I'll just take my 5, 10K a day and walk away, which is still a tremendous amount of money. But, there's been days that I've made hundreds of thousands of dollars in a day. And, to make hundreds of thousands of dollars in a day, you have to be okay risking hundreds of thousands of dollars a day. Once you get to a point in trading, it sounds kind of crazy, but like if you close my eyes, tie my hands behind my back and tell me to trade with my feet, I could probably still make a couple $100 a day. Right. But that's very easy. That's great. But to be risking, hundreds of thousands, if not millions of dollars, 25 years into my journey after I've already made a significant amount of money, then that I think once again goes into gambling where you're just doing it for the rush. And, I'd rather focus on, making my money, enjoying the process of trading. It's the sport of trading. And I could certainly enjoy it with less risk,
I think once you keep the love for trading is key. But look, the more money we make, the more expensive life becomes. So, you got to keep that up. But so what's next for you? Any new projects on the horizon?
No, nothing too crazy. I mean, my dream has always been Jay Leno, the American talk show host guy. So Jay Leno is a talk show host guy, and he has an airplane hangar filled with classic cars and filled with cars. That's always been my dream. My dream is to have, hopefully an airplane hangar, but I'll sell it to a warehouse, just filled with cars. So my goal is, a lot of people on social media, they purchase vehicles for social media and bragging and this and that. But for me, I find that cars are, something that relaxes me. It's a hobby of mine. So my goal is to, start to build out my car collection and just start enjoying stuff like that. I just got married a year ago, so focusing on being a good husband. Right? Eventually, in a couple of years, want to try to have some kids. And, when that time does come that, I'm going to be a father, I want to be a father that's there. So that's going to kind of tie in with the fact of de-risking my trading. So I got a couple of years still, but when that time comes, that'll be my confirmation signal to start to reduce my size,
Yeah, for sure. And it's been a real pleasure to have you on today, Alex. It really has. I've really enjoyed this. Look, if you ever want to come back on again, you're more than welcome. And if you're ever in Ireland, you know where to hit me up, because I'll certainly love to take you out here as well. But thank you so much for taking your time out, man.
Definitely, yeah, for sure. Let everyone leave a comment. And if they want to see a part 2, we'll do a part 2.
100%. And look, guys, if you want to go follow Alex, all the links will be in the description.
Sure.
All right. Take care.
Cool. Fantastic episode.
This episode is brought to you in partnership with Forex.com, a leading provider of online trading services. Remember, trading Forex and CFDs carries risk and isn't suitable for everyone.